What up? Welcome to Homegrown Hustle, where local brilliance takes the center stage. I'm your host, Matt Eichmann. Join us every week in celebrating innovation, guidance, and the power to inspire greatness. Let's explore the stories that shape our local business landscape, and together, let's ignite the spark of excellence. What's up, everybody? Welcome back to the Homegrown Hustle. I'm here with Patrick Donohue, the CEO and founder of Hill Capital. I've known Patrick for quite a few months now. He's really active in the local EO chapter and very much a champion of local entrepreneurs. So Patrick, first of all, thank you for coming on. I'm really excited to have you. You've built Hill Capital around a legacy that ties in with James J. Hill, the original empire builder, right? Yeah. So let's just start right there. What does the empire builder mindset mean to you in today's landscape?
I appreciate that. Well, first off, thank you for all your work. It's really important, the work you do for these videos and podcasts to get the word out there. And so it's been great to get to know
pleasure.
you. And it's
we love this.
Really impressive entrepreneurship journey that you've been on and all that you do. So, and it's a great tie-in to the legacy of James J. Hill. And the Hill Capital Corporation name does come from James J. Hill. When we were founded, it was actually, we started at the James J. Hill Reference Library in St. Paul, Minnesota.
Okay.
And that legacy does live on today. But Mr. Hill was extremely humble. And so very few people actually know his name. He was right there with James, with Rockefeller and with all the JP Morgan and all of them back in the day. But Mr. Hill didn't want his name on anything. And so there's only two things that have his name on it. And it's his home that's now owned by the Minnesota Historical Society and the James J. Hill Reference Library, which he said they could formally open and name after he passed away. And so there's quite a cool history there that not a lot of people know anymore. But I think about that today. I think especially within the upper Midwest where we're located, there's some very successful people that have very humble backgrounds and like to stay that way. Make huge impact in our world. And I think about that a lot today with our legacy because a lot of the companies we invest in, a lot of the people that I'm around are very much the same way. You wouldn't really know how successful they are, what they're doing unless you really peel back the onion. So those are some of the things that come to mind.
Those are some of my favorite people.
Exactly.
They don't flaunt it and throw it out there. They just like have success and they live their life simple still.
Yeah. And like you, they're family centric, you know, because they understand what's really valuable in this world. And it's not about the money. It's what money might afford them to do a bit more of, but it's really about freedom and choosing to do the things that they want to, and especially family first, like you and I are so centered on and care about.
And a lot of like Midwestern entrepreneurs, right? Like there is a slightly different mindset, especially within like some of the East Coast cities, right? There's this mindset of let's blow a business up, sell it, and go do it again. And the Midwest is pretty different compared to that. Like you touched on freedom and the finance, and both of those can kind of go back and forth on like what's most important. But at the end of the day, Midwest is very much about family and like long-term legacy that I see. So these businesses that are like trades, like myself, people aren't coming into them with that intention. They're coming in to create a future and opportunity for their family. And
it's interesting too, because when you were mentioning that, I think the upper Midwest, my guess is, and even Minnesota, I don't know the statistics, but I wouldn't be surprised if we have an outsized proportion of multi-generational family businesses, which is super cool. I know for sure we're headquartered to one, if not a couple of the largest privately held businesses in the U.S., if not the world, and one of them is Cargill. And that's really neat because the impact that has on our community is absolutely tremendous. They have not been well, I should watch what I say, but I'll just say it. They have not been the victim of private equity. They have not been, traded around by Wall Street banks. They've built a very, very valuable business that's been very impactful, not only in our backyard, but throughout the world. And that's really noble because a lot of the world around finance and Wall Street and, like you said, East Coast, West Coast has become very transactional. And that has, there's a time and a place for that, but that can have a lot of negative impact.
Very much so. I mean, the transaction, that's a prerequisite and a requirement for business to happen, but the people and all the other things that lead up to the transaction, that's the stuff that makes people want to come back and do another transaction with you or never want to talk to you again.
Yeah, exactly.
Right. So I think just touching on like the idea of private equity in general and why that's a tool for business owners in the landscape for a scaling business. I'm pretty familiar with it myself. We might have some viewers that aren't. So do you just want to talk a little bit about like the idea of private equity and some of the nuts and bolts there?
Yeah, happy to. And in my book, Breakout Valuation, I give an overview of private equity and private credit. And what I think is important for people to really know and understand about the term private equity is that it's a broad-based term. So it's basically private equity is anything that has to do with equity. So think about stock in a business with a private business. And so most people call private equity what has been traditional leverage buyouts, where people are using debt to like completely buy out a business. That's where people think about private equity. But private equity also includes venture capital and everything like that even what we do, angel investing and anything, because that's all transactions that are happening for equity and they're private. And so it's a very, very big space. And it's a space that it hits the headlines quite a bit, and it's something that people should be aware of, but it's grown quite a bit and it'll continue to grow. I think it'll be choppy in some coming years, but it'll continue to grow. And so it is important for people to kind of understand what is this term, why is it being thrown out there in popular media quite a bit, because it is impacting no matter how big a business is, even down to a solopreneur, what's happening in and around private equity, venture capital, angel investing, all of it does impact everybody.
So within Thank you. First of all, I think that does a really good job of kind of laying that framework. Within the pest control space, there's been probably the last 5 years a crazy amount of private equity coming in.
I don't know your industry, and I can only imagine.
Why? What changed to switch the theories of where the funds for these big, like sometimes like university funds, right? They end up being the ones that hold the majority shares in the pest control company.
Very
and
much
that's
so.
Fascinating to me.
Oh, it's mind-bending, even for me. And I've been doing this for nearly 30 years. It's absolutely mind-blowing. 10 years ago, one could not have imagined private equity going into a lot of the home services businesses in particular. So pest control, HVAC, and all that. And now private equity firms have been stepping in and acquiring businesses, rolling them up. We've even seen it here locally with remodelers in Minnesota Rusco, which just went into bankruptcy. And ended up having over $100 million of debt against that business just in Minnesota Rusco, which is mind-blowing. You know, that's a lot of remodeling jobs.
Well, and they were in business for 50 some years.
Yeah, so. And so it's quite amazing. And the reason, so your question is why? The answer is simple: money. There has been money chasing returns, and we have records amount of money in our economy, and it's chasing a return. And so private equity as a broad asset class has done very well historically over large periods of time. So not only has there been a lot of our money in our economy, but because of Harvard and Yale and some of these more famous endowments that have done well in investing in private equity, now all the more like everybody is chasing that. And so even the schools that are a fraction of the size of Harvard, the small colleges and universities as part of their endowments, they're now investing in funds that are investing in private equity. And that's what's interesting, because these little private equity are not little, most of the times they're very big, but these private equity firms are owning a lot of businesses that are literally Main Street businesses. It's the companies that are doing pest control services and the local coffee shop and all that type of stuff that one would have always thought, and historically it always been locally owned and operated, and now they're basically owned and controlled by an institutional investor that would be classified as private equity.
And there's different resources that get brought in and leveraged up so it can be used as a platform or whatever to like get the returns.
Well, and you just said a really important word there that I want to make sure everybody thinks about, is you said levered up. And that's exactly the problem. Leverage is the concept of utilizing debt. And so if these businesses were acquired outright and didn't have debt, that'd be one thing. The Minnesota Rusco wouldn't be out of business. But the problem is when they buy these businesses, they're utilizing as much debt as they can possibly utilize to make those acquisitions.
Based off the finances of the business.
Exactly.
Interesting.
Well, we'd hope, but that's a whole nother story. But but based off the financials of those businesses, but that's the problem because they are priced to perfection. And so when a business doesn't execute in the coming years after that acquisition to perfection, that's when they're going to go bankrupt because they can't afford the debt payments that private equity firm, that buyer utilized to acquire the business. And that's why it has a major negative impact on our economy. That's why the underbelly of private equity is quite ugly.
Let's switch to that. Let's talk a little bit about like not the propaganda that's put out there of, oh, you can exit your business and make all this money and go live the dreams that you have. Like the fear that a lot of people I know within the pest control space that are getting these calls every week from private equity firms is they want me to stay on, but now I'm not in control and I feel like what they're telling me, there's something that I'm missing.
Yeah.
And is that kind of the underbelly that you were...
Very much so. I mean, that's, Wall Street, broadly speaking, is very transactional. And the unfortunate part is that both sides have incentives to lie to each other. That's what's really unfortunate about it, is neither party actually has all that much incentive to be all that truthful.
Is there a requirement to?
Well, legally, right? I mean, one's doing due diligence and has to go through documentation, and legally one should have their financials in proper order and be paying the right amount of taxes. So there's a whole lot of like legal angles of why it should be done right. But in terms of like people not being truthful, because if somebody's going to buy a business, they're going to want to walk into abracadabra and basically convince you as the owner to say, got a beautiful business and so on and so forth, but probably not worth a whole lot. It's probably worth 3 times EBITDA, whatever that EBITDA thing is, which, by the way, you shouldn't even bother memorizing the acronym because it shouldn't exist, which is a whole nother conversation. But they're going to convince you of all these things and basically work to basically fleece you out of the business because they're going to utilize charts and graphs and insights to convince you your business is worth this when it actually might be worth this. But then also you and others would have an incentive to say, well, my business is worth this. And that's where negotiation happens and hopefully it lands in the middle. But private equity has gotten very good at convincing a lot of business owners to take, to sell their businesses at very good valuations because that's how they're able to make their money. And one of the biggest things that they do, and you mentioned this, is they have this idea of a platform where they've got a bigger company that's going to be a bolt-on. I think that's what happened with Minnesota Rust. But they're saying, okay, you can plug into this bigger platform, even maybe utilize their name. But then a lot of times they're convincing the business owners to not take cash off the table and they'll take stock in this new co or this new platform entity. And these business owners a lot of times aren't doing enough what I would call reverse due diligence, doing due diligence on them to really understand how much risk they're taking in doing basically a stock swap.
Well, and the conversation might just be a little over their heads at times too when it comes down to the finance component for some of these smaller businesses.
I've been at this for 30 years and it gets over my head. I mean, this stuff is not. This is not for the faint of heart, and so. That's why any business owners, even if they're somewhat financially sophisticated, it's hard, it's difficult, and it's filled with a lot of like unknowns and traps. And so this whole process, and that's why there's a whole industry around M&A and advisors and attorneys, and those things are very important for people to do these things right and make sure that they have the advisors. But even still, it's really difficult. It's really hard because who they're competing against, if you will, you think about the negotiation process. If one is selling to a private equity firm, this private equity firm is filled with, financial nerds like me that are doing this stuff day in and day out and doing hundreds of transactions, and they understand all the angles and they'll understand the business owner's business better than they will from a spreadsheet standpoint, at least. And that's how they're able to get a lot of these things done. So there's a lot of considerations
and then there's
going
like
into it.
The psychology of the deal overall.
Oh, well, that's exactly.
Because that's what I've learned is there's a totally different introduction to the relationship from a psychology standpoint. And that's the scary part for me, where it's almost a level of manipulation at times. but it's like ignorance is bliss. So.
I agree. And there's things like deal fatigue. There's strategies that they deploy to, whittle people down. And a lot of it is they're constantly asking for documents, and they let months go by, and all of a sudden the founder CEO is letting their eye off the ball because they're having to deal with all these document requests, and then the core business financials are starting to kind of go down a bit and so forth. And then they try to retrade, saying, well, now your EBITDA isn't as much, and so now the deal should be priced lower. And there's all these little tactics that they have to get the business cheaper.
Yeah, because it's their job to get the best deal.
It is.
Right? Like those aren't the fund owners. They're making money on just the transaction taking place, right? And I think just having that awareness, like these people, they're part of a business, and that business's objective and goal is to make money.
Yes.
And that's taking part in this valuation. And it's my job as a business owner and the shareholder to ensure that we're making the best financial decisions with the right partners, yada, yada, yada.
Yes. Yeah.
And that, you kind of forget all that when somebody's waving all this money in your face.
You do. And I think for our purposes of this show is to just get people thinking about it. We could talk for hours about all this stuff, and there still is not going to be enough education for these business owners, but at least be aware of it and really think about why am I being solicited for this? If they go down the process, like, what should I do to be mentally prepared for it? How should I think about surrounding myself with advisors?
Because like private equity is kind of like opportunity, right? They're bringing all the resources and assets in and giving oftentimes cash influx so that different moves can be made.
Yeah, and done right, it's very powerful. And when people want to exit, it can be extremely wonderful. I know a lot of people have made a lot of money because that private equity partner was able to utilize that owner, and that owner was continued to build and grow. And that is great. But I think unfortunately there's so much money that has moved into this space, and there's so many private equity firms now. I think it's like 20,000 private equity firms. It's a mind-blowing number.
Wow.
And the point I want to make there is a lot of these, where we kind of start with this conversation, we make it all sound bad, but a lot of these private equity firms have really become incentivized to really convince a lot of people to sell when they weren't actually thinking about selling or ready to sell. That's why you're getting all these solicitations. And so that's why we want to raise awareness of there. But when somebody wants to exit and it's done right, a private equity partner can be a very valuable partner.
And what's unique about Hill Capital is there's like a similar approach, right? But the goals and the objectives aren't to grow this and exit and now just make a bunch of money and go start another fund and do that. It really is centered around that, what we touched on earlier, like the Midwestern entrepreneur. So let's touch a little bit about what's unique about Hill Capital's lending structure and talk about like magnetic vision and the who you guys look for when you're partnering.
Yes. So when we got started, we started Hill Capital Corporation because there is a capital gap in the marketplace. Literally, think about this in between what's available from banks and Shark Tank, angel investors. There's a massive capital gap. And so businesses, like a lot of home services businesses, would fall into this capital gap, especially businesses that are asset light, like most businesses are these days. So they can't go to the bank and get a $500,000 loan to hire 3 key executives and to execute a growth strategy, because the bank really needs hard collateral. And if it's a nice business that might be able to double over 5 years or triple sales over 5 years, well, that's not good enough for Shark Tank. That's not good enough for angel investors, because angel investors, venture capitalists, they need the opportunity to get 10 to 100x their money.
Really?
And so that's why a lot of the more Main Street type of businesses don't fit traditional angel venture capital funding models. So when we founded Hill Capital, we built Hill Capital to address this capital gap. And the way we do that is with our Hill Note. And that's our structure that we utilize that is unique to us. It's something that I developed. I understood on how to structure things that would best, I think about it as harmonizing what's in the best interest of the investors that are putting up the money and also harmonizing the interest of the business owner, which is a really tall task. It's really tough to do, but it's saying, let's just think through all of the scenarios here and let's create a structure in which we can make sure the investors get a fair return for the risk that they're taking, and to make sure that the business owner has the best opportunity to grow a valuable business, because at the end of the day, that's what we care about at Hill Capital.
And the last thing you want is like this effort and energy that's like strife internally, right? Like everybody's got each other's best interests in mind. So let's be working in the same direction.
Exactly. Easy to say, really hard to do,
right?
Especially with an investor in an owner relationship.
So when somebody who's a business owner is coming in and they're starting a relationship with you, what are the things that you're looking at when you're trying to identify, one, this is a good business with growth opportunity, and I think like how you are looking at valuation as part of this whole process is really important that we touch on that as well, because the valuation process as it stands with overall mergers and acquisitions, it's not the same from how you're thinking about it. Do you want to move to that and kind of touch on that part of it a little bit?
Yeah, a lot there. So let me do my best and then bring me back to the core question. So when we look at a business, we're looking at a few things to see if they're what we'd call Hill ready. And the biggest thing is the people. So I'll talk about some financials and all that. That's important. But at the end of the day, what's important is the people, is the business owner. And, you know, what is their background? Do they have skin in the game? Have they been through some tough times? Because that grit demonstration of having been there, done that, is hugely helpful to us, because when we're looking at a business and we invest and become a partner with them, it's how are we going to be as business partners together through good times, but more importantly, the bad times, because every business is going to go some really challenging times. So when companies come to us, we are thinking through, what is the background? Who are the business owners or owner? And what are they going to be like as business partners for Hill Capital? So that is the biggest thing. Then we can get into the financials, into valuation, in those other things, the industry that they serve. But I would keep it, for our purposes, big picture. We're looking for businesses that have rational growth expectations. We are not looking for, nor do we need something that can go from 0 to 100 to $1 billion. That's the venture capital world. There's a lot of money out there. They can go chase after that. We're looking for the companies that can say, hey, I'm at $1 million in revenue and I've got a goal to get to 3 to 5 million revenue in a couple of years from now. Okay, like that's rational. That seems doable. They can tap into our community and utilize our funding, our capital to be able to get there. So that's where the rubber meets the road. The other portion of this is, you talked about valuation. Valuation is an important concept, but the challenge with valuation, it really comes on the equity side. And this is what we've solved for, because angel capital really needs to get as cheap of a valuation as possible. And the business owner rightfully wants the highest value as possible, because it's all about how much ownership are they going to have over time and what that leads up to. And so what we've done with valuation is, our Hill note looks to the value insofar as it's a fair value to where it's at today. So we would look at if they've issued employee stock options, if they've sold stock to an outside investor, or if none of those things, what's kind of a reasonable valuation today? Because what we're saying is, we want the opportunity to participate in a small percentage of that value creation above where that value is today. So that's where valuation would come into play for us, but we don't get too hung up on it, which is beautiful.
When it comes to magnetic vision with these business owners, that's something you talk about a lot, Patrick. Yes. So let's kind of define what magnetic vision is first, and then talk about a little bit maybe what some business owners could do if they don't really have that vision, and how they can tee up a better vision for themselves.
Yes. And thank you, Matthew, for bringing it back to that, because I was sharing insights about how we're really looking to the business owners, to the people, to be vision driven. And a lot of that's around the construct of what I call magnetic vision. And so it's really important for a owner to have a vision of where they're going, but then to communicate it, and communicate in such a way where it attracts and repels the resources that they need to get there. So thus magnetic, like a good magnet, it attracts and it repels. The process of sharing a vision and attracting resources is extremely powerful, especially for us as small business owners and as entrepreneurs, because we need more things than just money. We need connections to vendors, customers, awareness in our industry. There's a lot of things that we need. And so that's why having a vision-driven owner that is out there speaking about their vision and making it magnetic is very important. And that's where I would really encourage people to lean into that and to think about that, because when they're looking for money, whether it's from a professional investor like us or their community bank or wherever it may be, when anybody is able to articulate where they're going and why they're going there, my experience, that's where the magic happens. And that's why actually it's going to be the whole subject of my new book. It was a couple pages in my book, Breakout Valuation, but it's all going to be about magnetic vision on the next book, because I've come to realize how powerful that whole construct is in creating value.
And I know myself, for one, I've thought that I had a vision and then quickly realized that vision wasn't really where what my business needed or where we were currently at. It was just an idea that was there, and the mechanics on how to get there is a pretty important part of the vision. Otherwise, you just got hopes and dreams.
Well, and that's where it makes it really powerful to get out and communicate it, because that's how one stress tests it, gets feedback, and gets to understand, is it truly a vision that's achievable, or is it really an illusion?
Yeah. So I based off how you just described it and how I know you, I would say that you have a very magnetic vision for Hill Capital.
Yes.
Do you want to speak a little bit about what your vision is there, especially with 2040? You got big goals set for that.
I appreciate the opportunity. So when we founded Hill Capital Corporation, we did so with our core values in mind. One of them is transparency, because we wanted to not only make investments, but we wanted to do so in a way that helped educate the overall market. And I start there because Wall Street, I think, as we all know, is not well designed to serve our small business community. And we wanted to really help be a force around solving for this capital gap. It is my goal, our goal for Hill Capital Corporation, to invest in over 500 businesses and over $1 billion by the year 2040. And so
that's a big goal, Patrick.
Thank you. Well, that's what we wake up every day and we think about. We're still in the first inning. We've now done 19 investments, so we're just getting the ball going. But we've laid the foundation. We know the model works, and it is very achievable. But that number was important to me because I knew once we started to get to that type of scale where we've done hundreds of transactions, we'll now start to be seen and recognized on a more national scale. And I'm hopeful that it will influence others to, replicate or pay attention to our model and the Hill Note, and have a better way to not only finance and fund small business owners, but also to provide them with support ecosystems. I call community, so we can increase the odds of success.
And the overall process, just how you're talking about it, it sounds like there's so much more attention brought to the human component there, whereas all the other conversations I've ever heard around this are like, we need a team and we need leaders, but that's like very little of the whole onboarding process. It's all about numbers. It's all about predictable revenue. And that's great and that's important. But the human component, like without humans, there's no business to business. There's no business to consumer. Like business is human to human, period.
Well, and technology has been a big factor for many decades, and it's grown in utmost importance, especially recently with large language models and so forth. And in the world of finance, a lot of this investment decision making has been turned into a software algorithm, and that's the problem. Think about FinTechs. I mean, it's all based on running statistical analysis and regressions and what they're doing to make a decision on what to invest in and how much to invest and how to price that money. And I think that could be interesting, properly combined with the human element. But the problem is, in my experience, all these FinTechs, there's no human element anymore. It's clicking through a website and getting a decision. You never talk to anybody. And I've seen the ugly side of that, where businesses run into problems and The other side of that, whoever provided that money doesn't care, and they're foreclosing and they're taking legal actions and all that type of stuff. But there's no human being sitting down saying, hey, what's going on? How can we be helpful? And that's what we do day in and day out at Hill Capital, is we're asking, what can we do to be helpful to our portfolio companies?
And the FinTech, we haven't defined that, but correct me if I'm wrong, this is kind of like some of that predatory lending that's happening with almost like an Amazon-like transaction.
Yes.
Where you click through things, you put in a little info, and ooh, here's a bunch of money.
Yes.
But that is a huge problem, and something you've been talking about for quite a while for entrepreneurs to watch out for.
Yes.
So let's hit on that, because this is one that I don't want to see anybody get taken advantage of by these type of things.
Nor do I. And FinTech is just a term that's financial technology. And the idea of somebody being able to get a loan online is now pretty straightforward. 10 years ago it was kind of a novel idea, but now it's kind of the standard practice.
Yep.
And it's a very valuable innovation that has been brought to the market. The challenge is that call it asset class, was very small and esoteric, a few billions of dollars. But it has grown at a 27% compounded annual rate of return over the last 10 plus years. And it is now over $1 trillion market of direct lending into private small businesses. That's over $1 trillion. And it's a crazy amount of money. It's absolutely crazy. So it's good and it's helpful that money is available, but the problem is it has become a playground for a lot of bad actors. So you literally think about like the pawn shop and payday lending for consumers. It is now the playground for payday lending and pawn shop like activity for small business owners. And it's a massive problem. And this market, again, it existed back in the day, and you used to see it where somebody might get 10 or 20 grand or something like that, usually from some shady outfit on the East Coast that no one ever heard of. But now people are able to pull down hundreds of thousands, and we've seen it now millions of dollars. We know a business owner that took down $9 million and had a business that was only a couple million in revenue. That's the type of money that is sloshing out there, and it's absolutely mind-blowing. Now, why should anyone care? Well, here's the problem. This stuff has become so engineered to get people to click the clickbait and to go through the process and to take down this money. And people don't know what they're signing up for and what they're getting. The user experience, the user interface, user UI, UX has become so slick that the vast majority, if not all of the people who are taking down these predatory loans don't actually know what they got. We had a couple of companies that literally had kind of the same storyline. They said, hey, good news, we got a line of credit, which for a lot of small businesses is just kind of unheard of, because that's really hard to get for a lot of small businesses. And they're like, we know it was expensive. It's 17%, but we got a line of credit. I'm thinking, well, that's actually not bad, because if they can take down a chunk of money for a few months and pay it back, 7%, pretty reasonable, actually. And I said, send me over the docs. And I take a look at the docs. One, it wasn't 17%. It started at 42%.
Oh my
and number
gosh.
two, it wasn't a line of credit. It was actually tranches of term loans. And here's the worst part is when they pulled that money down, one of the tricks of the trade for predatory lending, all the interest was charged up front.
Oh my gosh.
So when they pulled down $100,000 on this supposedly line of credit, the next day they actually owed $150,000, which if you were to pay back weekly per the terms of the agreement over 18 months might equate to like that 42% I'm talking about. But if you paid that back in a month or two, the interest rate would be well over 100%. This is stuff that's happening day in and day out. And I can't name names, but you go and search for a loan online. This will be all the ones that are sponsored, that'll pop right up on all the searches and so forth. That's all the stuff that looks very legitimate. They talk about lending billions of dollars, and they have, but the terms on what these direct lenders are doing, these merchant cash advances, it's absolutely shocking and horrifying. And we are now seeing companies going bankrupt because of this. And it doesn't take a lot. We know companies that have taken down, a few tens of thousands of dollars, $50,000. But when you're paying 50, 100% cost of capital, that spirals out of control. It's no different than what we all know as consumers to be careful of credit cards.
Yeah.
But it's the same thing. And it's really ugly. And why people need to care. One, stay away from it or understand, read the terms and conditions. Frankly, run it through a large language model, run it through AI, do whatever you possibly can to understand this stuff. Talk to advisors, call me. But then also, why it's affecting everybody is because I think it is basically laying the foundation for some economic hardship that we're probably going to go through in the coming years. It could literally be in the next few months. We've had some really big bankruptcies that have now been headline Wall Street Journal that are affecting a lot of people. And I think it's just the canary in the coal mine. It's the tremor before the earthquake. And I don't know if the earthquake is going to be in 3 months or in 3 years, but it's coming. And it's going to affect all of us as small business owners.
And that's not necessarily a bad thing, right? Before we started recording, we were talking about choppy waters can be a space where there's a lot of opportunity.
Yes.
Right? So with the choppy waters forecasted, how is Hill Capital kind of preparing for that? And what type of shifts or changes might other entrepreneurs need to be aware of or just thinking about in the next few years?
Well, for Hill Capital, all of our investors are individuals and all of them are very aware, and we share economic insights with all of our stakeholders all the time. So they're aware of these things. Would people be impacted? Yes. But we also understand that when these choppy waters happen, we want to be prepared to continue to make investments, because as an investor, choppy waters can present some of the best time to make investments. And that's the same thing with the business owners. When it's choppy waters, if a business is financially healthy and it's strong, they're going to probably be hit with everyone else. But if they're hit less than the companies that are financially unstable, they're going to be able to win more market share. They might be able to buy them. They'll be able to continue to build and grow through those tough economic times. And that's what we're prepared to do at Hill Capital for sure.
So within the portfolio you all have, are any of like the Hill notes or the terms you have with exit planned in that period? Or
well, what is beautiful, the reason why it's a note is we call it an equity-based note, but we shorten that to Hill note. And we think of everything as equity, but we structure it as a note so we can get paid back, because that's really important. So we don't need to have an exit. The problem with a business owner that sells equity to an outside shareholder, there's only one way to give them liquidity, and that is to sell the business for cash. That's the elephant in the room with angel investors, with venture capitalists, that nobody wants to fully acknowledge and to realize. But when somebody sells shares to a VC, they have to have a plan to sell that business for cash in 5 years. And the vast majority of businesses are not well set up to do that. Starting a business, as you and I know, is really hard. It takes a long time. And that's a short fuse. You know, a good business, I think, takes a good 10, 15 years to really get its feet underneath it. So people have to realize that. So with our Hill note, we structure it so that as a company has the ability, then they can pay us back, and then we're good. We don't need the business to sell for cash. Now, if they're wildly successful, sell for cash, yes, we would get an extra bump from that, but it's not a requirement. It's not mandated at all.
I think that's incredibly unique.
That is the key. That's the key to the whole equation.
It really is, because now the need for cash for these growth activities, you can get there without having to say, yep, I'm okay with being done in 5 years and my life's work just being a bunch of money in my bank account. And like we said earlier, a lot of Minnesotans, a lot of business owners in the Midwest and across the country, they don't want to do that. They just want to keep growing their business.
Exactly. And not only that, but they might want to hand it over to the next generation. Which we are huge fans of, because many of my LPs are actually multi-generational business owners.
Really?
So we love when people have a vision that they think about wanting to own and control their business, for more than 5 years or 10 years. We think that's pretty darn cool.
For
and
sure.
those people cannot sell equity to angel investors. That story won't fly because they can't get they can't get liquid.
So there's a McKinsey study looking at the growth rate of family-owned businesses over time versus businesses that aren't. And the rate at which small business or family-owned businesses grow after like 15 to 20 years exponentially increases.
Really?
Yeah.
I'll
share
that.
I'll share the study with you.
Yeah.
But there's a whole write-up on it, and it's really unique. It talks a lot about the psychology of the leaders and things like that. We'll have to link to it in the show notes also.
Yeah, please do.
I know we're kind of getting to time here. There was a couple things that I wanted to touch on, a few quotes that you have that you mentioned are kind of bookends for how you look at businesses and entrepreneurs. One's a James J. Hill quote, and then the other's a Charlie Munger. You want to call those out and why those are important to how you're thinking about this?
Sure. Well, and I wish maybe you have them in front of you.
I've got them here.
Yeah, maybe I could. I wouldn't be able to quote it precisely.
You on the spot
no,
here.
But I know exactly what they are, and I can speak to why they're there.
All right, I got it. So James J. Sorry, I'll cut you off there. So James J. Hill: work, hard work, intelligent work, and then some more work.
Yep. So James J. Hill was one of the most successful entrepreneurs in the history of the United States, and I think arguably the world. And he created the only privately financed transcontinental railway in the history of the United States through territory that wasn't even the United States back in the day. And to think what he had went through. But, it was just a reality. I love that quote because, well, one thing, Hill doesn't have a lot of like quotable quotes, which is kind of interesting. Like he actually wrote a book that nobody hardly knows about because it's pretty dry. But I love the whole like work hard aspect because that's what it's all about. There is no free lunch. There's nothing really easy about this. We read a lot of headlines that might make it sound like entrepreneurship is sexy and easy at some points in time, but it's not. It's gritty. Every day you got to wake up and just grind through it. And that's what Hill is speaking to. It's every day. Hard work, and more hard work. And that's how I think about this. And it's not a negative thing, a bad thing. No. I love the work. I absolutely love it. I get up every day excited about this, but it's hard work.
You can't show up and expect anything but work, right?
Yes.
Otherwise, you're going to get punched in the face. And then, so Charlie Munger's 3 rules: don't sell anything you wouldn't buy yourself. Don't work for anyone you don't respect. And work only with people you enjoy.
100%.
These are so powerful.
I mean, this is why I'm here.
Yeah.
I respect you deeply, and I love being around people that I want to be around. Like, where I get inspired by, and we can share and, those common insights and the sharing of knowledge, that's really powerful. And Munger is one of the greatest learners on the history of the planet. This is, for people who don't know, it's Warren Buffett's business partner in Berkshire Hathaway. And I'm a huge Berkshire Hathaway fan, go to the annual meeting every year. I mean, Munger is one of the best. Would highly recommend people, read some of his quotes and so forth and his books. It's just amazing. But it's be around the people you want to be with. Because here's a billionaire that could do anything in his life, and he died working. He literally was working on Berkshire Hathaway up right until the end. He passed away at the age of 99, a few months before he was going to turn 100 years old. And that's really key, is to be and work with the people that you want to be with, because at the end of the day, that's what matters. And then to live a life. So sell things that you don't believe in. You can't sell things you don't believe in. Like, you have to be doing the things you believe in. That's why I believe in Hill Capital. I've put my whole life's work into this, the structure and how we do this. I love sharing insights about it. And that's what's important. But you have to sell the thing every day. You have to sell the thing that you believe in. So that's why those are out there.
So Charlie Munger and James J. Hill, those two kind of tie back into each other, because without some of those things, work becomes really freaking hard. But if you believe in what you're doing and you're doing it with people that you love and respect, work becomes like fun and something that brings energy. And it's still work, But
yeah,
those are two really
whether
powerful.
It's work or personal, there's always lemons that come up, and you have to learn how to turn lemons into lemonade.
Got to make lemonade.
You have to have that positive mindset.
And that is something that you can learn and develop over time, but it takes intention. So you had connected me with Dr. Brad Canham. We had him on a little while ago. Great
Wonderful.
guest. We touched on the Entrepreneur Jubilee, which is another awesome event. And that's something that Hill Capital is involved with as well, right? Do you want to talk a little bit about the event portion of what Hill Capital does in the community there?
Yeah. So we always talk about funding and community. Community is a very big aspect of this. So we last week just had our Hill Capital Summit. We had about 120 people come, mostly targeted at our portfolio companies, business owners that we're getting to know and they're getting to know us, and then our ambassadors and our investors and members of our community. And so we had a coming together. We spend the vast majority of the day in roundtables, so people are actively talking to each other. We only have one keynote. And then we had 10 companies get up, and those business owners shared their magnetic vision. And so we had the Magnetic Vision Challenge. This was the first time we did it. But taking a step back to Dr. Brad, we tested this at the Entrepreneur Jubilee in Eden Prairie, Minnesota this summer. And it was a really nice way to do it. I, along with a handful of others, helped start 1 Million Cups in Eden Prairie, which is a weekly event that entrepreneurs can come and share what they're doing and what they need help on.
Interesting.
And so out of that group, we started that in, I think it was like 2018 already, 2017, 18. But out of that, we've got a really nice ecosystem, and a handful of people that go to 1 Million Cups every week, including Dr. Brad, came together with this idea of this Entrepreneur Jubilee, which was some talks. We did a Magnetic Vision Challenge. And then what was really fun is throughout the park is people put up tables and sold their goods. And we had literally a kid out there who was probably 13, 14 years old that was selling things that he made. And we had a guy who's probably 89 years old that was driving around in a bike that he invented. And it's just really neat. And so I would love to see more of that. I was just really inspired by when Dr. Brad and others came together with this. I was quite busy at the time, so I just helped out wherever I could. And so Hill Capital was a sponsor, and we helped with this pitch challenge, if you will, the Magnetic Vision Challenge. So I love doing stuff like that. If anybody's listening and they know events that we should sponsor, attend, support, promote, we love that type of stuff.
And the Million Cups, that's intriguing to me. Talk a little bit more about that and like where they meet. Is it like open or?
Yes. So this is very powerful. Let's take a step back because it'll be important to the context. 1 Million Cups was started by the Kauffman Foundation out of Kansas City, which is the largest foundation in the United States dedicated to entrepreneurship.
Never heard of it before.
So yeah, and it's an important name to know because there's a lot of resources that are free or cheap or available to entrepreneurs through the Kauffman Foundation. Back in the day, the Kauffman Foundation said, what are we doing to help entrepreneurs? And one of their staffers said, well, we should just have some entrepreneurs come in, have a cup of coffee with us and ask them what's on top of their mind. And so there was born 1 Million Cups, one of the first groups. And the idea is to share over 1 million cups of coffee throughout the year, talking to entrepreneurs, getting to know them and learning about what they need to be successful. And so they started opening up different chapters. In St. Paul, Minnesota, at the James J. Hill Center, which is why I'm tied to all of this stuff, was one of the first chapters that was opened outside of Kansas City. And so we started that chapter and started having 1-2 entrepreneurs come in every Wednesday morning and sharing what they're doing and what they need to help. What they need help with. And what we do is the audience just says, what can our community do to be helpful?
I love that so much.
It's a beautiful conversation. There's no membership dues. There's no really sponsors. There's no money. There's no RSVP. People just show up, gather, and it needs a host and somebody to put out coffee. But I've always taken care of that. I get the space, I get the coffee, and the rest happens. And then so when I quit going downtown St. Paul, I got a hold of Kauffman Foundation and worked with them and established 1 Million Cups Eden Prairie, because that's where I live, is in Eden Prairie, Minnesota. And so I was able to get that chapter up and going. And I'm very proud to say that it's one of the more healthy chapters throughout the United States. Kaufman now has about 201 million cup groups throughout the United States. Wow. And so if a listener is listening to this, watching this, and they're based in Florida, I would encourage them to go look at 1 million cups, because there's a chance that there's a 1 million cups group within driving distance.
That's an awesome resource. I didn't even know.
Most people don't like all these things.
Wild.
That's why it takes all of us to share.
So I'd love to have you and Dr. Brad on at the same time to jam.
Yes.
Is that something you'd be open to in the future if we can make it work? All right. Put it down, Casey. We're going to make it happen. We might
spin off the planet on that one.
That's all right. Dr. Brad's got great energy, and the podcast we had was right up there from an energy level with what we got going on here today. So I think it'll be fun. And you guys go way back from what it sounds like.
We do. Yeah. And he's done some magnificent work. His background is marketing. He went on to get his PhD. And so now he's, as you know, a professor at the University of St. Thomas and has a lot of insights on entrepreneurship.
He seems like just a habitual learner. He
very
just
much so.
keeps coming back and learning.
Well, that's
why
we're dangerous together, because that's one of my strengths on StrengthsFinder is I'm a learner, which answered a lot of questions for me over the years.
I love that. All right, so anybody who's listening to this podcast and they're like, man, I got to talk to Patrick. I got to get a hold of Hill. I want to hear more. How do they get a hold of you? Where can they learn more about you and Hill Capital? Why don't you go ahead and talk right into the camera here? Yeah,
by all means. And so anybody can get a hold of me, come to our website, and you can see it at hillcapitalcorp.com. You can email me at patrick@hillcapitalcorp.com. Also, I have a good LinkedIn presence. So if you connect with me, just say that you heard us on this podcast here today. And so just so I have that reference point, and I connect with everyone. I work hard to share insights and to get in touch with everybody that reaches out. So
I would say it's a better than good LinkedIn profile. All right. One last question, Patrick, and then we're going to have to wrap up. So podcast is called The Homegrown Hustle. We've had over 100 guests on, and we ask every guest what hustle means to them within business. So how would you define hustle for us, Patrick?
Well, hustle, and it's interesting that I was talking about a learning mindset earlier, but that was what was coming to mind for me on that, is to really have that learning mindset, that every day really thinking about what's important to me as an individual, learning mindset. And it actually reminds me of one of my favorite quotes from Charlie Munger. And it is immoral to be stupider than you need to be. Charlie Munger.
This guy seems like a G.
He said this at, I think it was the 2018 annual meeting. And there's a lot of what they call Mungerisms, and it is one of my favorites, that it is immoral to be stupider than you need to be. And it's absolutely true. Jim Rohn, many people have talked about this, but it's incumbent upon people, especially business owners, get all the information. I mean, it's easier now than ever. There's no excuse not to get the information. And so I think about that with hustle, because that's what it takes. Yeah. It takes that grind of constantly gathering the information that's relevant to one in their journey.
That's one of the better definitions I've had. You talked about your book a little bit. Where can you find the book? Is it on Amazon and all that?
Yes, Breakout Valuations on Amazon. And what's cool about it is because I did an audiobook and I recorded it myself, so it's in my voice. So you can get it on Audible or any of the audiobook websites. So that was a lot of fun too, because I never thought I would do an audiobook version, but I had so many entrepreneurs say, well, tell me when it's on Audible. So I finally bit the bullet and did the recording.
That's cool.
About 2 years ago. So
awesome.
Yep, it's out there and available. And there's resources that are available to people that have the book via our website. And so again, anything we can do to be helpful to help people think about building a valuable business, we're happy to help.
Patrick, thank you so much for coming on here. I love what you're doing at Hill Capital. I love the community you're building. Thank you.
And I love the hometown hustle, man. Thanks for all the work and all you do to give back to the community.
It's what it's all about. We
Exactly.
talk about people a lot, but the people in our community, that we're doing a lot of cool stuff here in Minnesota, right? So
yes,
like
indeed.
talking about that and just learning from experiences, I think is really powerful. So looking forward to having you back on here in the next few months or so. And thank you all for all the support, likes, follows, comments. Keep it coming. If you got any questions for us, send those in as well. Check Patrick and Hill Capital out. They've got some really cool opportunities that can really impact your business if it's the right fit. So check that out. Until next time, keep hustling. Hey, thanks for tuning into the Homegrown Hustle. It's been an honor to share the stories of local legends who make our community thrive. Don't forget to subscribe, rate, and review. Please stay tuned for more insight and inspiration. We got a lot of heat in the chamber. This is Matthew Eichmann saying peace out until next time. Get hustling.